This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. A little bonus today, 5 chapters from my book, Trend Commandments. They're pretty quick chapters. It's an easy listen, but it's a damn important lesson. A lesson of either, if you are unfamiliar, education, or if you are familiar, motivation and a reminder. Those 5 chapters are systematic trend following. Number 2, change. Number 3, no prediction. Number 4, price action. And number 5, place your bet. Trend Commandments was an interesting book to do. It was meant to be a little on the less dense side than compared to my trend following 200,000 word beast. But it's interesting, over the last decade, Trend Commandments has developed a following. Quite a few people really enjoy it. And I'm somewhat surprised because I think the print copy is either hard to find or not available. And sometimes I see these prices on Amazon. And sometimes if a book is not around, the price will go to like 5 cents. Trend Commandments has gone the other direction. I've seen it priced at crazy prices. So that's kind of fun to have a book that people want that is hard to find. Without any further delay, let's jump right into 5 chapters from my book, Trend Commandments.
Chapter 9. You don't need to know what will happen next in order to profit from whatever happens next. Systematic trend following. What is trend following trading? The first part is trend. That is very straightforward. Every trader needs a trend to make money. Following is part 2 of the phrase. Trend followers wait for a market to move first, and then they follow it. Now, some argue that the term trend following is too imprecise. Others use terms like global statistical financial analysis or managed futures to describe the strategy. That debate will not be solved here. If you do not like the phrase trend following, substitute your term as you keep reading. Trend following trading is reactive. It does not predict market direction. Trend trading demands self-discipline to follow precise rules, no guessing or wild emotions. It involves a certain risk management that uses the current market price, equity level in your account, and current market volatility. Trend traders use an initial risk rule to determine their trading size at entry. That means you know exactly how much to buy or sell based on how much money you have. Changes in price may lead to a gradual reduction or increase of your initial trade. On the other hand, adverse price movements will lead to an exit. A trend trader's average profit per trade is significantly higher than the average loss per trade. Trend following aims to capture the middle or the meat of a market trend, up or down, for profit. You will never get in at the absolute bottom or get out at the absolute top. Stocks, ETFs, leaps options, bonds, currencies, futures, and commodities are all ripe to trade. This is the only trading strategy that can be traded on a desert island. As long as price data is available, all else is inconsequential. Media, fundamentals, broker options, talking heads, and so on are simply not necessary to profit. Yes, initial discretionary decisions must be made as a trend follower, such as choosing a trend-following system, selecting a portfolio, and determining an appropriate amount of risk. However, after the basics have been set in motion, you can systematize trend trading rules and automate your daily trading life. This is not day trading, where you are glued to the screen all day in some Red Bull-induced hyperactivity bender. However, you have to maintain agnosticism to market direction for trend trading success. Unfortunately, not everyone comprehends or wants to comprehend that. Consider Erin Burnett of CNBC. She was interviewing David Harding, a successful trend trader, and asked, "A lot of people obviously want to know what your secret is. What is the magic bullet?" Harding replied, "The secret, strangely enough, is not having an idea of what we are going to be doing in advance. We react to the unfolding market's trends rather than make forecasts of what's going to happen." Burnett missed his point in response. "When you look out right now, do you think, big picture, I know you are quantitative, but do you believe that we are in a fundamental cycle, or are we in a bubble?" Harding, "It's not false modesty for me to say I don't know. I really don't know. I really do not have the gift of second sight." Consider fundamental investor John Hussman. His writings are always insightful. He makes a cogent case for an out-of-control Fed and Congress, but consider an excerpt from his recent letter. "In hindsight, I frankly underestimated the willingness of investors to believe that the underlying structural difficulties of the economy, which still persist in my view, were so easily solved by disabling fair market accounting disclosure and repeatedly violating the provisions of the Federal Reserve Act. In any event, it is my job to not only defend capital, but to achieve returns despite the recklessness that policymakers choose to pursue." Trend traders use an entirely different type of analysis, not based on traditional reasoning. Trend followers do not have Hollywood narratives to explain market bubbles on top of bubbles. A trend follower does not have to know any of the things Hussman laments not knowing. Buy things that have gone up on the theory that they will continue to go up. Short things that have gone down on the theory that they will continue to go down. Chapter 10. Empty your mind. Be formless, shapeless, like water. Now you put water into a cup, it becomes the cup. You put water into a bottle, it becomes the bottle. You put it in a teapot, it becomes the teapot. Now water can flow, or it can crash. Be water, my friend. Change. Markets go up, down, and sideways. They trend, they flow, they surprise. Have markets changed? Not only have markets changed, they will continue to change. Check your history books. If you have a valid market philosophy, learning to accept that change and flow with it is your greatest asset. No matter how ridiculous market moves appear at the beginning, and no matter how extended or irrational they seem at the end, following trends is the rational choice in a chaotic, changing world. That thinking leaves trend followers as generalists when it comes to their trading strategy, and that's not easy to accept for many. The dominant trend within universities is ever narrower specialization. A higher premium is placed on deep knowledge within a single field, read fundamental expertise in one market, versus broad wisdom across multiple fronts. For example, one trend-following practitioner started trading trends in 1974, making hundreds of millions in profits and perhaps billions for clients. The major strategic elements of his trend-following trading systems have never changed. He was blunt. "The markets are just the markets. I know that is unusual sounding." Occasionally, someone trying to promote something or start a debate will argue that trend following has to change due to changing market conditions. Specious. The root of trend following is based on responding to change. It is designed to be adaptable. Does that mean every systematic trend trader will take the risk of shooting only for huge returns? No. Does that mean every trend trader will capture a trend in the exact same way? No. The trend-following way has many practitioners and many recipes. However, just as there are thousands of car models, they are still cars. Chapter 11. Prediction is very difficult, especially about the future. No prediction. There are many, many things that Google could do that we choose not to do. One day we had a conversation where we figured we could just try to predict the stock market. And then we decided it was illegal, so we stopped doing that. Google is a great search engine. It won the title of Search King, and former CEO Eric Schmidt has made a fortune. Congratulations. However, when he opines like that, he sounds delusional. Schmidt might be worth billions, but wealth does not make up for a lack of common sense. He is one of many. A group of eminent economists recently apologized to Queen Elizabeth II for failing to predict the financial crisis. In summary, Your Majesty, the failure to foresee the timing, extent, and severity of the crisis, and to head it off, while it had many causes, was principally a failure of the collective imagination of many bright people, both in this country and internationally, to understand the risks to the system as a whole. What did the Queen think when she received that? Did she believe it? Did she know better? No one can absolutely know when a market will move and trend. Do you have to know to profit? No. Look at insurance, gambling, and other related businesses. It is clear that even a small positive edge, along with a solid view of probabilities, can lead to fortunes. However, that does not mean the path to prosperity will necessarily be comfortable. Think about the emotional ups and downs when facing the unknown. Leaving Las Vegas recently, I drove down toward Hoover Dam. Knowing I would soon be from the vantage point of the new Hoover Dam Bridge spanning the Colorado River, the feeling of anxiety was encompassing. During the decline, you do not know how far you will be able to see down. But when you finally get to the bridge, you can't actually see the dam over the ledge. The wall is too high. Relief. That is the life of a trend trader too, keeping in check how you react to the unexpected or unknowable. Many trend traders have even gone back and looked at 19th century markets to see if their strategies would have been successful. Interest rates, currencies, and grain prices in the 1800s showed just as many trends. The markets were as random and unpredictable as today. Similar research took me to the National Agricultural Library in Beltsville, Maryland. My curiosity had me walking stacks, reviewing 1800s historical price data from The Economist magazine. I verified the same price data research. Indeed, unpredictable trends were across all markets. Fast forward 100 years, and consider a story about a trading seminar where a notable trend follower was the guest speaker. The audience peppered him with questions. Do you like gold? Where do you think the Canadian dollar is headed? How do you know when there is a top? To each of these he replied, I like gold, it's shiny, pretty, makes nice jewelry. Or, I have no idea where the Canadian dollar is headed. Many were not impressed. They felt they had wasted their money. However, his message could not have been clearer. The answers were found in the very questions each person asked. Do not ask, how do you know the trend is moving up? Instead ask, what is going to tell me the trend is moving up? Not, what do you think of gold? Instead ask, am I correctly trading gold? His answers placed everyone in front of a mirror, and worse yet, some did not know it. Chapter 12. It's getting so a businessman can expect no return from a fixed fight. Now, if you can't trust a fix, what can you trust? For a good return, you gotta go betting on chance, and then you're back with anarchy, right back in the jungle. Price action. Tell me something the market does not know. The idea that you can know enough about Apple, oil, GE, and gold to trade them all the same way may seem preposterous, but think about what they all have in common. Price. Market price is objective data. You can look at individual price histories without knowing which market is which and still trade all successfully. That is not what they teach at Harvard, Wharton, Kellogg, Stern, Darden, or pick your favorite business school du jour. However, the concept of price as the critical trading cue may be too simple for mass acceptance. For example, a prominent business anchor opined, "At some point, investing is an act of faith. If you can't believe the numbers, annual reports, etc., what numbers can you believe?" A longtime financial reporter at Fortune magazine was also on the highway going the wrong direction. "If some of the smartest people on Wall Street can't trust the numbers, you wonder who can trust the numbers." You can never trust those numbers, that is, the reported firm details, completely. Someone can always alter them. Remember, Enron had a faked trading floor. Beyond that, even if you know accurate balance sheet numbers, how does this help you determine when or how much to buy or sell? The market is always right, and price is the only true reality in trading. If you want to make money in any market, you need to mirror what the market is doing. If the market is going down and you are long, the market is right and you are wrong. If the market is going up and you are short, the market is right and you are wrong. Other things being equal, the longer you stay right with the market, the more money you will make. The longer you stay wrong with the market, the more money you will lose. You do not need to know anything about bonds. You do not need to understand different currencies. They are just numbers. Corn is a little different than bonds, but not different enough to trade them differently. Some people have a different system for each market. That is absurd. You are trading mob psychology. You are not trading corn, soybeans, or S&Ps. You are merely trading numbers. Chapter 13. This is not Groupon. No risk, no reward. Place your bet. You want to see life as a continuum, running on a loop back and forth from risk to reward. If you want a big reward, take a big risk. If you want an average reward and an average life, take an average risk. Easier said than done, however, if you want the big reward. Our system is notorious for playing whack-a-mole with achievers. From an early age, people are conditioned by families, schools, and virtually every other shaping force in society to avoid risk. To take risks is inadvisable. To play it safe is the message. Risk can only be bad. However, winners understand risk is highly productive and not something to avoid. Taking calculated risks is different from acting rashly. Playing it safe is the true danger. Far more often than you might realize, the real risk in life turns out to be the refusal to take a risk. If life is a game of risk, then to one degree or another, being comfortable with assessing odds is the only option for a fulfilling life. Consider trading from a startup business perspective. Every business is ultimately involved in assessing risk. Putting capital to work to make it grow is the goal. In that sense, all business is the same. The right decisions lead to success, and the wrong ones lead to insolvency. Blunt, but true. There are ways to go in the right direction, however. Ask yourself these questions. What is the market opportunity in the market niche? What is your solution to the market need? How big is the opportunity? How do you make money? How do you reach the market and sell? What is the competition? How are you better? How will you execute and manage your business? What are your risks? Why will you succeed? Those questions are just the start of your trend-following journey. The next step is thinking deeply about your understanding of risk nuances. There are two kinds of risk, blind and calculated. The first one, blind risk, is always suspect. Blind risk is the calling card of laziness, the irrational hope, something for nothing, the cold twist of fate, winning the lottery, etc. Blind risk is the pointless gamble, the emotional decision, or the sucker play. The man who embraces blind risk never wins in the long run. However, calculated risk can build fortunes, nations, and empires. Calculated risk and bold vision go hand in hand. To see the possibilities, work things out logically, and to move forward in strength and confidence is how you win. Calculated risk lies at the heart of every great achievement and achiever since the dawn of time. Trend followers thrive on taking calculated risks. Like the original Karate Kid movie, wax on, wax off. Risk on, risk off.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.